So 20 years until retirement.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Leroy Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. How y'all doing, man? Hopefully y'all doing, I got the Zoom thing across my whole screen right here, and light-skinned Deborah is right there in front of me. Like, the blocks are like this big. It's an E over here, a Marco, me, and then light-skinned Deborah right there, like huge. I wish I could move my, let me see if I can move my camera without unplugging nothing. Cause Zoom, when I share the screen, Zoom don't let me share the screen. Let's see if I can turn this around without breaking. Right there. Just right there, just all big.
Good Lord.
All big and just right there. You got me. This the block that I be in right here. And then we got E, we got Marco, and then Deborah face is right. It's like right in, because you see I'm here. This is me. And it's just right there staring.
Hey, get your finger from my mouth.
Hey, man. Look here, man. If this your first time tuning into Tim's Tidbits, this is what it is, man. It's what it is. Now, let me see if I can put this back up here right. All right. The cord ain't really up there like it's supposed to be, but that's what it's gonna be. Hopefully I don't unplug nothing. All right. Okay. First time was like, man, what in the world have I tuned into? What have I tuned into? This weird guy. All right, let me focus. All right, come on in here, Steve, Joe, Come on in here, Steve and Joe. Y'all come on in. Hey man, I jollipies. If I don't peek up there and see y'all in the waiting room, I'm sorry. You know what I'm saying? I ain't got no admin to just let people into the way. But I have to leave you in the waiting room because y'all already know. Y'all was here for the is that a 49-inch curve? No, that's a it's two curve, both of them curved, but I think they what is it? It's 20 something. Both of them are 20 something, right? I don't have my I got a ruler, but the ruler not that long. So I put that there. That's a that this is a 12-inch ruler. So if I go diagonal, it goes right there to the corner of Steve's name there. Take that there. So I'm gonna go with 27 because I put the rule up there twice and there's still a little bit of room over there. So I'm gonna go with no, that's gonna be I'm gonna go with 27. I'm gonna go with 27 because I can put a 12-inch ruler up there twice and it still don't cover it. So I'm gonna go with 27-inch curve monitors. Two of them, one here and one there. Um they yes, a Samsung. It's Samsung, but I don't know the name of it. I don't know the name. It's both of them Samsung, but I don't know the name of them. And then I see that y'all blame here to learn this shit. Y'all know how I get. Let's see here. Y'all know how I get. Hello. Okay. Hold up. Oh, I'm sorry, y'all. Where's my controls? Am I echo? Hello. Okay, I'm not echo. All right. That's me. I don't want me. There you go. So, uh-oh. Let me see if you can see my screen. Yes, you can see my screen. Y'all see my somebody told me I like to show my plaque. So I said, Tim, like showing that plaque. Right? That's dirty. My brother, right? That's the water bottle for everybody who ain't never seen. That dirty. Long live Anthony G. Anthony G. Brown Sr. Right? That's dirty. That's the water bottle. His daughter made that. What I tell you, my nieces and nephews are so hood. I'm so hood. They made this right up. The Rice Krispies, these real Rice Krispie treats. You can open this up. Now it's a real Rice Krispie. Yeah, it's a real Rice Krispie treat wrapper up under this wrapper right here. But so it's like a custom wrapper on top of it. Right. That's my Canon C200 that I be um shooting with. People like, Tim, why you got a camera like that for doing videos? Right. I used to shoot wedding videos and commercials and stuff like that. And then this right here is the one curved monitor. And then this right here is the other curved monitor. And this is my little setup. And I'm in the corner now. I made this desk. I made all this right here. I made this desk out of like different pieces. You can see right there where I don't know if you can really tell on here, but you can kind of see it here, but I filled in the seam. So you can't, so it just looked like one whole piece. You can kind of see right there was two different pieces. Right. And then I have this laying here, right? Because on my camera view up there, on that view up there,
you can see, like if I move this green screen out the way, right? If I move this green screen, you can see the edge of the desk right here. You can see that edge of the desk right there. Right. Then that's my guitar up under that don't be playing. I don't know if you can see it over there somewhere. Yeah, there it is. That's my guitar. Don't be playing. That's my back scratcher. Right. All my Wi-Fi stuff. Right. Got my retirement plaque over there. Picture of my sweetie on the wall. That's the door I be telling everybody they can hit right there. That door right there. That's the door I be telling her. I be like, the door there, you can hit that door. That's the door I be telling everybody about right there. And then my green screen, if I turn this around, if you look up here, see my green screen go up. I got it up to the ceiling. Right. So it's up to the ceiling up there. Who they calling me? Oh, that's my brother calling me. All right.
My brother cut my room tour short. He said, man, I've been waiting 3-4 minutes. My bad. Hey, that's it, man. Room tour. Y'all say thanks to all here to learn and share. Is this session for members only? I can't see anything on YouTube. Y'all can't see nothing on YouTube? Wait a minute, Earl. Earl, you commented on YouTube saying, is this for members only? You can't see anything on YouTube. Hold on. And I was supposed to be looking at the name of the thing. It was a Samsung. I don't know. I can't see the. It just say Samsung. I don't know what it is. Maybe he means your charts. Oh, I don't know. What you mean, Earl? Earl, what do you mean? While I'm trying to figure out what Earl means. Good evening. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in, let me see do I sound okay to y'all? I got the mic kind of far away from me because people was like making me feel kind of strange for having the mic being up to my face like that.
Sound good on both YouTube and the Zoom.
All right. Okay, so
Are you recording?
it's on YouTube. Why?
Oh, okay, that's fine.
I mean, I'm not recording on Zoom, but it's on YouTube.
Okay.
Y'all stop. Like, y'all know how I be getting distracted and I be all off on a tangent. I mean, just had to refresh my screen. Oh, you talking about when I was doing the little tour? You couldn't see what was going on with the tour? I don't know. What was I saying? Oh, if it's not your first time tuning in to Tim's Tidbits, please allow me to say welcome. And I want to also give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Haranya Grande. That's just big spot of Vito Hablo Espanol. And you're tuned to another episode of the Price Action Recap. And this episode of the Price Action Recap is being brought to you by none other than the Smart Money Manuscript. First link in the description below for $69.99. You can purchase the Smart Money Manuscript. It's a all-inclusive, one-stop shop course put together by myself. It's comprised of 40 different chapters of videos and quizzes. So there's roughly like 18 or so videos and like 18 or so courses, right? Different thing like that. And it spans about 2.5 hours. The video content spans about 2.5 hours. But it's everything to help you get well on your way to being a very educated and prepared investor or trader. Be it if you want to be a long-term buy and hold investor, be it you want to be a swing trader, be it if you want to be a day trader, an options trader, a futures trader. It's a nice foundation to get you ready to go and to help you become a even further well-rounded investor or trader. I have included, because I like to go above and beyond, I've included monthly Q&A sessions that you get at no additional cost with me, myself, every first Saturday of the month at 11 a.m. Unless I'm off doing family stuff, or if it's a holiday, or if I just don't feel like it. But every first Saturday of the month, we're going to have a Q&A inside of the Smart Money Manuscript, all for the low cost of $69.99. No additional cost. Fully realized mentorship, right? You can't beat it. You can't beat it, because how many times have you ever got a course and you just wanted to ask the instructor a burning question and they was just not available? Y'all get out my way, the little box, right? But if you go to the course area, the layout, if you will, laid out similar to like Discord. You have the different channels over here, if you will. If you're familiar to a Discord server, right? When you buy the Smart Money Manuscript, you will see monthly Q&A schedule. You will see the bat signal. You'll see the Smart Money Manuscript, and you will see SMM Live, right? SMM Live is where we will hold our monthly Q&A sessions every first Saturday at 11 a.m. Right? The schedule is under monthly Q&A schedule. And as you see there, the first one is scheduled for September the 13th at 11 a.m. Location in the live stream channel. That's this live stream channel there. Right? So, JM, wait a minute. I don't know that name. I do not know that name. I don't know who JM is. Who is JM? Do y'all know who JM is? Somebody named JM trying to come. Oh, they gone. They gone. Somebody named JM was trying to come in.
I think he was just a master debater.
Oh my God, it's too funny.
Okay, Jada. Now I know Jada. All right. I don't know who that is. I don't know who Jada. Were you JM?
Yes.
Okay, I ain't know who.
I was laughing that he's not gonna let me in. I better change.
I don't know who JM is. Hey, my brother said JM stood for just the master debater.
No way.
All right, so that's where we're gonna be this Saturday at 11 a.m. for the first Q&A. If you got questions pertaining to the course, right? Avery got me on edge. It's Avery and Felicia, Avery out there Ever since Avery started popping up in the live, you know what I'm saying? So if you got questions about the course, something that you working on in the course and you having challenges with it, my wife was telling me she was going through the course and some of the quizzes was busting on the head, right? Anybody else that's been going through the course, have you found the quizzes challenging, or have they been, you know what I'm saying, relatively easy if you go through the content? Anybody want to share their thoughts? Anybody that's y'all just got the course and y'all ain't doing that? Okay. All righty then. Let me go ahead and move this out of the way. Hold up. It was like when this morning I asked the gang who was gonna volunteer to lead the class this morning, and it was just like when I just hey, move out of the way. It was just like when I just asked that question there. I was like, who want to share their thoughts on something? That's all I heard. That's all I heard. Just crickets. Just crickets.
You know, we're scared.
Hit Learn and Share said it was relatively easy if you go through the videos. There are some trick questions. I don't recall putting any trick questions in there. I don't recall any trick. Does anybody else think that there are some trick questions in there? How about you, Jada? Jada, have you taken the Smart Money Manuscript? Have you signed up for it?
Yes, sir. I'm only on the second module. I need to spend a whole weekend doing it
My
when I'm
wife
not
was on
working.
the second. Which one? The second one is
The
it
banking,
budgeting or banking? Oh, banking.
banking.
Okay. On the first, the budgeting was busting my wife in the head. The first one was busting. She was like, I keep failing the quiz. I'm like, are you looking at the content? Hit Learn and Share said I had to repeat a few items more than once. WAP didn't count it as completed initially. WAP be pissed me off. WAP be acting. Oh, Shauna's trying to get up in here. My bad. My bad, Yolanda. My bad. I wasn't looking at. I was looking at a different screen. My reading might not be reading, but the taxes I had to take a few times. Taxes was busting you in the head. Oh, honey, yeah, you better look at them taxes, cause you live in Georgia like me, so you getting double taxed. You getting double taxed if you live. I know, it's it ain't many. It ain't. It's only a few states where you don't get double taxed. It's only a few of them where you don't get double taxed. But and what I mean by double tax is that you got to pay Uncle Sugar and you got to pay Brian Kemp or whoever your governor is. Ain't that's our governor, honey? Ain't our governor named Brian Kemp? Ain't his name Brian? I think his name Brian Kemp, if I'm mistaken. Yeah. We got to pay Uncle Sugar and Brian Kemp. So we be getting double taxed. Taxes. Y'all get out my way. Y'all all in my way. It's right here. Okay. So these are the states right here with their taxes. So how many are in here? All right, we got oh, it ain't give me no total there. Oh yeah, right there. So it's 22 and 21. Is that 43? 43. So it's only like 7 states. It's only like 7 states that don't have state taxes. It's only like 7 states that don't have state taxes, right? So most people getting taxed twice. And then you got, you know, if you stay in Alabama be having like local tax, right? They be having these crazy local tax over in Alabama. Cause my wife used to work in Alabama. They had like they got local tax in Alabama. So you got to pay fed, you got to pay state, and you got to pay local. And we don't even live in Alabama, but you got to pay it. And when she was working in Alabama, we always ended up owing Georgia. Always. Now, mind you, they took out Georgia, they took out Alabama, and they took out Fed out of her check. But we always end up owing Georgia when she was working in Alabama. I don't know why. I guess they was taking out less in Georgia. So, like what I do now, right? I done got into the habit where I pay extra Georgia tax, right? Because I pay my taxes throughout the year, just like if I'm getting paid on a regular job. I pay my taxes every month, right? So now I pay Georgia extra. I'm in the habit of paying Georgia extra because when I was just paying Georgia the norm and she was getting it taken out, like normally when she was working in Alabama, we always end up owing Georgia. Like we'll get like, just say if she paid $1,600 to Alabama, we'll get them $1,600 back, but then we always end up owing Georgia like just say $1,000. We'll owe Georgia like $1,000 or $1,200. So it like everything like kind of offset. So they'll take, it's crazy how they be doing it, but we always owe Georgia. We always owe Georgia because it be showing you what your return gonna be, and you think you're gonna get this amount, right? Then all of a sudden your return be lower because I'm like, man, I done got off on a tangent. I'm sorry, y'all. I done got off on a tangent. We pay Fed, state, and property tax down to the trailer you pull on the back of your truck. Yeah. Oh yeah, we pay everything. Matter of fact, Georgia, like me, I got like older vehicles. So if you bought a car in Georgia, if you bought a vehicle, I think it's like before 2016. If you bought a vehicle or anything, any type of motor vehicle, it's something called ad valorem tax. And if you bought, and they stopped charging ad valorem tax, I think 2016 or 2017, somewhere around there. So if you bought a vehicle anytime before that, when you go to renew your tax, you pay something called ad valorem tax. And so like I pay more for my tags on my 87 Grand Prix than my mama paid on her Nissan Rogue, because she bought the Rogue after that time. So now she only paid for the little decal, and it's like $20-$30, whatever it is. But I be paying like for my truck, I pay like $100 and something for the tag. For my wife car, we pay like $100 and something, maybe $200, because it's based off the value of the item. And you got to pay ad valorem tax. Matter of fact, I got to go pay my property tax here before the 1st. I'm gonna go probably sometime this week and pay my property tax on my house, because our house is paid off, but you got to pay property tax, right? Man, Uncle Sam, they get on my nerve, man. All these doggone taxes, man. That's what my brother be like, why you ain't bought your Tesla yet? Cause I got to pay these freaking taxes and all this other stuff. I'm gonna go buy a Tesla now. I got another car note. Man, all my vehicles paid off. We ain't got no car payments right now. I ain't trying to go. Only way I'm gonna buy something new is if I cash out on it. And man, a lot of money. Anyway, I'm sorry, y'all. I'm pretty sure Somebody say Pennsylvania is the worst when it comes to local tax. Man, if Pennsylvania local tax worse than Alabama, I feel sorry for y'all. Because Alabama, oh my goodness, Alabama, they got so much local tax in Alabama. Oh my goodness. Oh my goodness. Let's get to it, man. If Price did something today that caught you off guard, there's a link pinned to the top of the chat. It's a link to the Zoom. Click on that link. Come over here to Zoom. I have to let you in, right? I got to let you in. You don't have to do no email or nothing like that. I ain't trying to market to you or nothing like that. I done did all the marketing I'm gonna do. Talk about the Smart Money Manuscript. First link in the description below, $69.99. But I'm not gonna try to market to you, email you nothing. Click on the link, pull up, and say, "Hey Tim, hey, I don't quite understand why Price did this today, right?" And we'll talk about it. Well, if that don't work, call me back and we'll figure this thing out. Who know where I get that from? Who know? And anybody but Lump. Anybody can answer but Lump. Who know where I get that from? Well, what did he do? Well, he wouldn't do that. Oh, see, you doubt the 6 when he pulled a been a 9. Yeah. Well, try that. And if that doesn't work, call me back and we'll figure this thing out.
He said, "No, there's no
That's the
circuiter
Cat
here."
Williams.
Yeah, yeah. There's no circuiter here.
Yeah, that's that Cat Williams. That throwback cat. Before they cancel Cat. That before they cancel it. Well, what did he do? Somebody said Dave Chappelle. Man, Steve, get off my line. I'm talking about Dave Chappelle. Okay. All right, man. Today's price action. The morning was, in my humble opinion, complete garbage. If you don't know what garbage is, that's just like a fancy version of trash, right? That's the way French people say garbage, right? It was complete garbage. This afternoon, price action was much better, much better. I just looked at my screen and realized it made me think about it. If you see these little eyeballs right here on my screen, right? These little eyeballs are looking at something right there, right? If you're wondering why those little eyeballs are on my screen right there, it's because I shared something with the gang earlier. I shared something in Discord, right? I'm not going to share that on YouTube because I had some money in there. I think I had I had a screenshot of some money inside there. I did. All right. Yeah, I had a screenshot of some money in there. Ain't no way I can okay. I don't share money on Al Gore's internet. I'm paranoid like that. Okay, so basically, let me see something here. All right, so this is the original picture, right? That's the original picture right there, right? That's the end of the day, right? This is the end of the day, and this is the picture that I shared here, right? By this time, right? By this time, I was stopped out. I was stopped out around here somewhere, right? I was stopped out around there somewhere. Okay. Going like getting wicked back into that low, right? This little pull back there that stopped me out right around there. Cause I think I had my stop loss somewhere around that low, right? So this little pull back up into there that stopped me out, right? And what, cause while I was typing to the gang, I got stopped out, right? And I said, the message read, everyone remember to keep the liquidity in the fourth. That supposed to say in the forefront of your mind, but it say remember to keep the liquidity in the of your mind, and you can trade and or profit even if it doesn't make it all the way there. I added in that even if it doesn't make it all the way there, and then I said being stopped out in profit ain't a bad day. You know what I'm saying? And I added the even if it don't make it all the way there because I got stopped out when it bounced back up there, right? And so that was my target right there, right? And as y'all see, right, as you can see, because this is the picture that I shared. People on Al Gore's internet, you know, if you um believe that it was shared in real time like this right here or not matters not to me, right? But as you can see, it reached the target and beyond, right? Reached the target and beyond. Actually, we came all the way down into this propulsion block right here. That bullish order block right there, right? If you don't know what this bullish order block right here, inside of that bullish order block right there, right? That's our propulsion block. We came down into that propulsion block, and then we rallied back up to the new day opening gap. All right, rally back up to the new day opening gap. So this afternoon's price action was a lot smoother. Okay. Now, I didn't take a screenshot of it, but somebody in the gang, right? What was the first thing we did when we started preparing our chart? Because everything is pretty much still on here, like what we left on here throughout today. Because once I left to go to the gym, when I because I posted right before that, I said, hey, this price action is big trash, and I'm glad I traded last night. I'm fun to go to the gym, right? I can hide that part, right? So I can hide that part. I can hide that there. But I said, this is big trash. I'm glad I traded last night. I'm not going to sit here and tempt myself, and I'm definitely not risking my profits. I'm about to head to the gym. Moral of the story, there's always another day, right? Big Spider, be safe out here in them trading streets. You know what I'm saying? And that was at what time? That 11:04, right? So right here, right? So we was inside discounter. We was right around here somewhere, right? So all of this stuff up here that's on the screen, this is stuff that we marked out during the morning session while we was reading price. But my question is, what was the first thing we identified when we got ready to start prepping our charts this morning? Before 9:30 hit, what was the first thing we did?
The pre-market high from 7 a.m. to 9 a.m.
Before the pre-market high. We did do that. That was second. The pre-market high here.
It was a regular trade in previous PM and AM session highs and lows.
Very good. All right. So we went over there to our regular trading hours, right? And right here, that was our PM low. right? Right here. That was our PM high, right? We marked out this. We marked out that, right? And then we said this right here was our AM high, and this was our AM low, right? And we said we want to keep these levels in mind, and we made them real fat, right? We made them real fat. We had this right here. This is exactly how we did it. But Tim, why are you doing this right here? Because we're sprinting now, and we're drilling things into our noodles. That little spaghetti trap that we got in between our ears there, we're sprinting now. So we're going to make this fat, right? We made it fat like that right there. All right. We're going to take this right here. So that was our PM. We're sprinting now. Right. This is how we marked it out. Right. Get out the way, eyeballs. Y'all creeping me out. Uh-oh. You. Okay. This is how we marked it out, right? Now, if you take a gander at the price action on this 15-minute chart, is there anybody who cannot see the sensitivity of price when it comes to these liquidity levels? Because remember, what do we talk about? We said that we opened up the PD array matrix, right? And I asked the question. I said, on the PD array matrix, which of the PD arrays is the only one that's not listed on there as a single individual thing? Well, it's not listed. It's like on the PD array matrix, which one of them is the only one that's not listed on there as a single thing? That might have not have been the best way to say it. You know what I'm saying? A better way to say it, now that I'm saying it out loud again, it sounds kind of stupid, but a better way to say it would have been probably which PD array is listed, is both of them listed as a premium and discount. That would have been a better way to say it. I think that would have been a better way to say it, because when I just repeated what I said, it sound mad stupid, and I would have been confused if somebody asked me that. So the old highs and lows, if you look at the PD array matrix, is listed as a discount PD array and is listed as a premium PD array. Every other PD array, right, it's either just going to be a bullish one and a discount, or a bearish one in the premium, right? But the highs and lows, the old lows and highs is a discount PD array. The old highs and old lows is a premium PD array, right? So I said you want to remember the levels of your regular trading hour highs and lows, right? This is our afternoon high and low, and this is our morning high and our morning low, right? Tim, where do you get that from? Why are you picking that level right there, right? Because time is king, right? Somebody tell me, what's our regular trading hour time that we're looking for regular trading hour liquidity in the morning? Between what's the time window when we're looking back to the prior New York morning session? What's our time window for the regular trading hour liquidity?
9:30 to 12.
9:30 to 12, right? So if we look here from 9:30 and we go over here to 12 o'clock, right? That's the highest high, and that's the lowest low in between 9:30 and 12, right? What's our window for when we're looking back to the regular trading hour for PM session liquidity?
1:30 to 4 o'clock.
If we come over here, right, and we drop this right here on 1:30, and we take this here and take it over to 4 o'clock, right there. That's the highest high, and that's the lowest low between 1:30 and 4 o'clock, right? You want to keep a mental note, right? And if you can't keep a mental note, you want to keep an actual line on your chart of this regular session liquidity when you come into the next day, right? This is the first thing you want to identify. All right. Then once you identify that, you got other pools of liquidity that you identify. Next, after that, we identify what you said we identified. Who was that? I think it was it Jada? Somebody said something. What said we identified? I said it was before that. Who was that said that?
Oh, that was me, the 7 to 9.
Erica, yes. So pre-market, let me turn this back off. Electronic right here. So this is our pre-market high right there. And this is our pre-market low right there. What's our time window that starts us looking for highs and lows for pre-market? What time does that start?
7 o'clock.
7 o'clock. That's what this vertical line is right here, right? Y'all see this vertical line on the screen right there? We got a vertical line showing us 7 o'clock in the morning, okay? 7 o'clock in the morning. Draw that vertical line there, and as we go forward toward 9:30, right? Let me go down to, I'm on 15-minute candles, right? Get over here. Let's find 9:30. 9:30 right there, right? If we look in between that time frame from 7 o'clock to 9:30, right? That's our highest high right there, right? That's our highest high. That's our lowest low in between 7 o'clock to 9:30, right? So now, if you don't know anything about the Globex trading, matter of fact, you don't even need anything from the Globex trading. Why? Because these are the US indexes. These are the only liquidity pools that you truly need to be able to trade the indexes. Now, not saying you can't use the Globex highs because the algorithm refers to them, right? The algorithm. So if you understand the London, the Asian, and all of that, that's just more bullets that you're putting into your little bullet belt that you got wrapped around your neck when you go to the battlefield, right? But if you only knew these, you got everything you need to trade the US markets, the NASDAQ, the ES, the YM, the Russell, any of the US markets, right? Okay, so once you identify your liquidity pools, right, that's truly all you need. Now, is there anybody on here, right? Is there anybody on here who cannot see the sensitivity of price at these old highs and old lows? Is there anybody on this 15-minute chart right here? Because you can see it on the 15-minute chart. Like I can see it clearly. But is there anybody who cannot see the sensitivity in price at these old highs and old lows? Don't be bashful. If you can't see it, say, Tim, I don't see it, and we'll break it down. But is there anybody who can't see it or, be like, I don't know, what are you talking? What you mean sensitivity in price? I'm going to sip me some water while we give somebody a chance to speak up. Hey, I just noticed my bottle, right? I looked at the screen. This bottle it's got a green tint to it, but on there, on there it looks like this right here looks gray looking. It looked gray looking because it's not as green as this, but it's a hint of green in there, so it's filtering out the green, and it's a green tint on the bottle. So the bottle, it looked different than it looked in my hand. It looked clear. I'm sorry, y'all. Squirrel. Y'all don't care. And you see how it disappeared? You see how it's disappearing? When I get like the closer I get it to the green screen, you see how the bottle disappearing. Ooh. Squirrel. Let me reshare my screen, man. I know people be coming to my channel and be like, man, this dude get on my nerves, man. Why don't you just get to it? Why don't run put the timestamps in the bottom no more so we can skip through this foolishness? Okay, so right, as we see, right, we marked out our areas of liquidity, right? And when the market opened up at 9:30, all right, so we opened up y'all get out my way. Trying to find a spot I could put y'all. And if anybody I don't think nobody gonna try to join no more, but I still want to keep it here so that I can see if anybody try to come in. But I got to get it in a place to where it's not blocking me. All right, so we started out the day over here. Right, we started out over here. This is our 6 o'clock open right there. We opened up right here at the at last week's high. Right now, looking at price. Okay, looking at price. We started out the week. When we started out the week, we said that price on the weekly time frame, right, was in a bullish dealing range where we had retraced back down, right, into this area here, right? So we had a lot of efficient delivery there, right? And looking at the latest expansion leg, we came back down to a deep discount, right? A beautiful like OTE, probably nice OTE entry there, right? On that retracement there, nice deep discount. And if we go from the lowest low to the highest high, it just fell short of being a discount for the overall range. So I know that's a nice deep OTE retracement right there. Matter of fact, let's check it out. Let's check it out. Lowest body, highest body, OTE. Yep, 79% retracement. Nice deep OTE retracement right there. All right. But still got that calibrated eye. Nice deep OTE retracement off of this right here. Right. Somebody who was in the Asian Assassins. Who in here that was in the Asian Assassins? I know Lump was. Who in here was in the Asian Assassin? The Asian Assassins. I know Lump was. Yolanda, were you in there? You was in that C-Walk? Okay. Yeah. Yolanda, was you in there?
Yes.
All right. I know Lump was. Lump. Marco, were you in there, Marco?
Yes, I was.
All right. So we got a few people from the Asian Assassins in here, right? When when, as taught by Michael, when do you look for the OTE retracement? When are you anchoring it, looking for the after what? After what? ICT concept, if you will, you look for your OTE after a specific thing happens. What is that? Bullish or bearish?
Redistribution.
Say again.
Is it the redistribution? Like after it's consolidated, let's say you're on a buy
Let's
side of the
go.
market
Let's
maker
go.
model.
You good. Don't talk yourself into a hole. At accumulation, reaccumulation, distribution, redistribution. Once you get that expansion from your accumulation, your reaccumulation, your distribution, your redistribution, that's when you run your fib and look for your OTE. Right? Boom. I just done, hey, some people ain't know that. Some people was just running their fibs on every expansion and be like, oh, I'm looking for OTE. Oh, I'm looking for OTE. It's very specific criteria to this stuff, man. Okay. And you see over there, when I say we got this deep retracement there, and I said, let's run the fib. What did I run the fib off of? Let's see. I wasn't planning on talking about this, right? But when y'all get me to run in my mouth, I just can't help it sometimes, right? What's going on right here? What price engine model is this right here? What's happening here? What price engine model is this? This area right here. What price engine model is that?
CARD.
Price engine model. Don't come out here embarrassing me now. Price engine model. Price engine model. Remember, y'all know what the price engine models are? Price engine models. That you talk about, you talk about delivery. If the delivery is the C, there you go, Tish. It's one of the Migos. Offset accumulation, right? Why is that? Because we're accumulating right here, right? While we're accumulating, because we're going up, right? It's accumulation because we're going up. So we're engineering liquidity, we're accumulating positions, and then we take out the sell side first, and then we rally. So that's your offset price engine model, right? Now we're over here, we're at a stage of reaccumulation. Right? Why? We're on the right side, Joe. I ain't gonna be just keep picking you up now, Joe. I ain't gonna hey, Joe, you better stay in here. I ain't gonna just keep picking you up now. I got to keep looking to see where you come back in. Hold up, Joe. You in here 12 times. If some start going crazy, it's Joe, y'all. Right? Now, so we get our offset accumulation, right? So now at a stage of accumulation, right? We get our price engine model of offset, right? Once we get this run up, coming off of this area of accumulation, reaccumulation in a market maker model, that's when you're looking for the OTE, going from body to body, right? And you're looking for a 62, 70.5 or 79% retracement. Your stop goes below the anchor point, and then your first target is here, right? That's your first target there, and you can target up there, right? You can keep targeting by using the fib extensions, right? And the way you do that is you go in there and you put in negative numbers, negative 0.5, negative 1, right? Negative 1.5, right? You put them in standard negative 2, right? Negative, 2, right? And then when you look at there, then now you got extensions. That's how you extend it out, right? That's your first target there. and then you can extend it out like that if you think price is going to run farther. If you have another, if you say, okay, this is my true target right here, then you'll have to extend it out, right? Because that's your target there, but you have to extend it out if based off structure you think it's going to go higher, right? You just threw that in there for free. Because y'all got me running my mouth. I got to sneeze. It keep going away. It's beating me up right now. I keep feeling like I got to sneeze, but it keep going away. All right, now back to what I was saying. We started out the week here with, we said we're in a bullish dealing range that had retraced back down into a discount for the latest expansion. And in a daily range, we were in a bearish dealing range, right? We were in a bearish dealing range on a daily time frame. So we said the short-term daily and the short-term weekly were not aligned, right? So we said when the short-term daily and the short-term weekly are not aligned, right, that tends to give low probability. Okay. And then what happened, right? We opened up and we just consolidated a whole bunch. We pushed up, made relative equal highs, pulled back into the range, consolidated a whole bunch, right? And then because this was Monday and this was, what's this right here? Tuesday, right there. And then this was Wednesday, right there. Okay. So looking at what happened, we said because the daily and the weekly are not aligned, that's low resistance. We start out the beginning of the week just chopping, doing nothing, right? This is Monday's trading right here, right? Pookie to Pluti, right? Expansion, consolidate, expansion, retrace, consolidate. Pluki, okay? This is Tuesday's trading right here, right? Consolidate most of it, right? Still making these relative equal highs, right? Made a relative equal high there, right? Relative equal high there. We're accumulating all of this buy side liquidity, right? What is retail looking at that as, right? What's this right here? What's that right there?
Triple top.
Triple top. Triple top. So when the market starts to pull back here, right, and it trade below all this area of support right here, what is retail thinking?
It's falling.
It's falling. We're going down here. What is smart money thinking? High probability relative equal highs. Why is that? This high is lower than that high. This high is lower than that high. The algorithm is accumulating buy side up there. When the algorithm accumulates buy side, it's going to manipulate it away into some sell side. Then it's going to turn around and attack it. Right? That's what smart money is thinking. Okay? That's what smart money is thinking. All the stuff they taught us in the books are lies. Right? It will work every blue moon. Right? It will work every blue moon, but that's only when it aligns with what the algorithm is showing you, not because you see a crouching tiger, hidden monkey pattern on the charts. Right? That crouching tiger, hidden monkey pattern means nothing. All right. Now we come over here into, that's what I was gonna say right here. Right here on yesterday evening, after the market had closed for the day, that poke above that high right there. Who can tell me what that poke above that high right there did in reference to when we said we had a bullish dealing range on the weekly and a bearish dealing range on the daily. What did that poke above there do? Hmm? Hmm? Let me check my mic.
Extended the range.
There you go. Come on, man. Come on, man. Y'all better stop playing with Seawalk out here. Y'all better stop playing with Seawalk out here. It extended the bullish dealing range, right? The algorithm is giving you a clue right there, right? Why is that? Because we're inside a bullish dealing range. We're inside a bearish dealing range, right? We drop down and take out sell side liquidity right here, right? We're in a premium for both. We said this. We was in a premium for both ranges, the bullish and the bearish. We drop down, take out sell side liquidity. Then we go up here and extend the bullish dealing range ever so slightly. I don't care if we just poke above one tick, where the algorithm is showing you that the buy program is still in effect, right? We extend our bullish dealing range, right? So now instead of being from here to there, let me put this into quads. I'll put it into like that so we can see it better. Now, instead of being from there to there, it is from there to there, right? So we've extended the bullish dealing range ever so slightly, okay? Now, coming into the date, then that starts our trading for today right here. Right? Nope, it don't. Right here, this green candle there, that starts our trading for today, okay? So for today, we come down, right? Make a low, consolidate there, right? We trade up above the daily high over here during the London, right? Then we drop down here. And so there, relative equal low, right? Come here again, relative equal low, not taking it out, right? Relative equal lows. And then we come up here, right? Take out the buy side, retrace back down there. The news, right? First of all, the news trades down, repricing the fair value gap there, right? Come down, don't take out that low, rally up, right? And don't touch that high. Hurt just stops right there, okay? Then we come back down, start 930, right? And it's very ugly at 930, okay? What was when the 930 opened here, right? When we opened at 930 and we started trading down, gang, who was on there? What's the first PD array we identified, and what do we say about it? When it started trading down, right? We'd have marked out all our levels, right? And it started trading down right here. What was the first PD array we identified, and what did we say about it? Who remember? Who remember? Who remember? Y'all don't remember?
Is it that busy over there or the wick? What time frame?
You asking me.
That busy.
All right. I see here learn and share said fair value gap. Kim said balanced price range, not the balanced price range. And then Kim said inversion fair value gap. Yeah, I need more than that. Because there's a bunch of fair value gaps. There's a lot of stuff going on over there. Right? So I need a little bit more than that. Come on, Jada, you asking questions. You supposed to be telling me something. What are you telling me?
I said the busy, that on the 15-minute time frame, or was there a higher time frame PD array?
What? Talk about this busy right here?
Yes.
Eh.
The wick? I don't know. I don't know.
Wrong. See, y'all just throwing out there busy. It's on. What I said everything that we talked about in the morning is still on the screen. So you can literally cheat and look at the screen.
But the BPR hadn't formed yet.
I know that.
So
And I said, are you talking about this Bissy right here? You said yes. What else is on the screen? Kim just throwing stuff out there. Here, the learner shall said the lower Bissy. Yes, the lower Bissy right here. That Bissy right there. That Bissy right there. So when price started trading down here, right? We said we're looking at this Bissy right here, and we want to see if that's going to offer support of price or if we're going to create an inversion. Right? That's the first thing we said. So we marked out that Bissy right there on the 15-minute time frame. As soon as the market opened and we started trading down, why did we point that out? Why did we say this? Because price had rallied up prior to the market opening and it failed to get to the buy side liquidity above price, right? We did not go in and do any field projections to see if it had come to an anticipatory reactionary point. So in that case, we were waiting for signatures from the algorithm to see if it wanted to use this as support to go back up and engage that liquidity, or if we were going to create an inversion fair value gap. Now,
hey Tim.
Yes.
Tim, why the Bissy specifically and not the order block right there?
You say you talk about here, the Bissy?
Yeah, why the Bissy and not that order block right next to it? Or am I
No. Personal preference, but the reason for the Bissy is because Michael has given us a way to identify imbalances to make them a high probability target to want to trade off of. He hasn't given us that when it comes to order blocks, right? But he's given that to us when it comes to imbalances, right? So anytime you have the first imbalance, right, that takes out some liquidity like that right there, right? If we trade back below it, that makes it a candidate to be a high probability inversion fair value gap. That's why we identify that Bissy as, is it going to support price? Because it's the first imbalance when the elephant stepped in the pool, right? And if it doesn't support price, now this needs to be at an anticipatory reactionary point. We at an anticipatory reactionary point, the first imbalance that takes it out, right? So now what do we got here? We got a new anticipatory reactionary point. Why? Because this is the new highest high, right? This is the highest high at when we got up here at this weekly high, at this daily high, right? So this is the first imbalance there. So if we get an inversion here, that's the algorithm saying, I want to go down, right? Now, what do we have here on this lunch off right there? That right there is the first imbalance that took out that high. Okay, that's the first imbalance that took out that high. But I'm not looking at this one to say, okay, if we create an inversion right there, then I'm looking at this one, because this right here was the first one. You see what I'm saying? That was the first one right there. So, and you wouldn't be wrong by saying, okay, if we create a breaker here, if we violate this bullish order block and create a breaker, right, then that's going down. But Michael hasn't given us a way to identify a high probability breaker in the detail that he's given for the imbalances. You understand what I'm saying?
I got you.
All right. So looking at that to see if it becomes an inversion fair value gap, or if it'll support price. Now, we come down here and we immediately create an inversion fair value gap. Now, what did I say about this right here, dealing with like the liquidity down here from the pre-market? I said, we're looking at this to see if we create an inversion fair value gap, keeping in mind this is a 15 minutes, so price can do what? Since we're bullish, right? We said since we're bullish, and this is a 15-minute, it's in close proximity to our low, to our midnight open, right? To our prior high, right? I said this is a 15-minute, so on a 15-minute time frame, that's enough time for price to do what? In reference to that becoming an inversion fair value gap. Okay, give me a little bit more detail here to learn and share. You're on the right path, but give me some more detail. Hold up. It's Wednesday night. Here, learn and share. Please tell me you are not in the back pew of the church texting on this Zoom call right now. Please tell me you are not in the house of the Holy Lord on this Zoom call texting on the back pew. Pastor Offering then asks you to say something to your neighbor 4 times and you ain't so with this 15-minute PD array, right? You have to understand that price, since we're in a buy program, we're bullish, price could realistically wick down into our pre-market liquidity and then still come back up and close respecting this and don't create an inversion fair value gap. Okay. It can do that. Now, we trade down and we immediately create an inversion fair value gap. Okay. So now we're on high alert, right, of watching this area right here. What shout out Yolanda, because Yolanda pulled up and asked this question earlier, right? About, I think we was on the 1 minute time frame and we were talking about the 1 minute was showing heaviness, right? Because on the 1 minute we had came down, created a SIBI right there, right? And we were saying the 1 minute was showing heaviness, okay? And but we want to see if we was going to create an inversion fair value gap on the 15-minute, right? And so she asked the question pertaining to, because this is a higher time frame and we're waiting to see if it becomes an inversion fair value gap, is that the reason why we're not putting as much weight on this high probability inversion fair value gap on the 1 minute, right? And the answer is the higher time frame takes precedence, right? And since the higher time frame takes precedence, you want the higher time frame to give you the inversion. And then at that time, if we come back to the 1 minute, now, now we can trade it as if we're still and look for targets based off the higher time frame. So at this point here, when we create this inversion fair value gap, there's nothing wrong with trading it immediately like that, right? This is what y'all hear me always refer to as the first touch, right? Michael be talking about the first touch, right? So we're trading, right, back up into this inversion fair value gap here on a first touch basis, right? And we bring it down, but you have to stick within the time frame that you're basing the trade entry off of. And since we're basing the trade entry off of the 1 minute time frame, right? We came down here, made a low there, traded back up into the inversion fair value gap. So now as we come down, your target is the relative equal lows here. That's your target. Trade over, because you're basing it off of the 1 minute inversion fair value gap. We're not basing it off the 15-minute inversion fair value gap because it doesn't exist yet. The 15-minute inversion fair value gap don't exist until this candle right here closes. That's when the 15-minute inversion fair value gap exists. And so now that the 15-minute inversion fair value gap exists, right? If that's your criteria from your structure time frame, right? Right, you say your 15-minute is your structure time. Oh, that boy cooking tonight. Y'all better rewind this one. You saying that that's your criteria, right? The 15-minute, once you get this inversion fair value gap, now you know it's time to go short. So soon as we create this right here, we're going to put a vertical line there because that's when this candle closed, and we're going to go back to the 1 minute time frame. Okay, going back to the 1 minute time frame. Now, looking at our 1 minute time frame here, right? We come here and now there it closed there, right? So we come here, we drop down there, right? We trade up, we poke above that high right there, right? So when we trade up and we take out that high right there, what does price do? Price immediately drops down and takes out that low right there. Now, you would not be wrong if you said that it's time to sell off of this SIBI right here, right? You would not be wrong. But, right? But what do we always say when we're in high resistance conditions, right? We want the algorithm to do what? When we're in high resistance conditions, we say we want the algorithm to do what?
Pick a side.
Huh?
Pick a side.
What it wants to do.
We want it to prove it. We want the algorithm to prove it, right? We want to prove it. Now, we're on, right? Our 15-minute has just created the inversion fair value gap, right? All it did was create an inversion fair value gap. Now, has the structured time frame come into an anticipatory reactionary point? At this point, has it come to an anticipatory reactionary point? Yes or no? We said that it just created an inversion fair value gap. So has it come into an anticipatory reactionary point? No. Very good, Kim. Everybody's scared to talk. Everybody's scared to talk. Very good, Kim. No. It has not come into an anticipatory reactionary point, right? So since it has not come into an anticipatory reactionary point, it hasn't really given you a valid reason to look for an entry, right? One, that's reason number one. Two, right? If we pay close attention, right? If we pay close attention, okay. when we dropped here, boom, right there. What did we trade below here? It's hard to see, but this line right here, what did we say that line was? All right, y'all remember what we said that line was? We said that was our pre-market low, right? When we dropped down there, our regular trade now was a little bit farther down, right? We said that was our pre-market low. So when we drop down into that low right there, right, we also drop down into prior day's high, right? We rallied up, we set a high, right? We came back down again, dropped down below. Now it's formed here. This is where it's formed. Okay. So we drop down here, right? Below that low, right? But we're still respecting that pre-market low, right? We're right there at that pre-market low, at that prior day high, right? And then price, and during this consolidation, we eventually rally back up and take out that high, right? We rally back up and take out that high. Now, at this point here, while we're in here chopping, right? When we go back up and take out that high, at this point here, the first thing that should come to your mind is this going to set up a bearish Judas swing, or if it's going to set up a wig snatcher, because we just took out a pre-market low, right? And we could potentially be going back to our pre-market high, because at the end of the day, we are still in a buy program. Okay. So that's, like I say, you wouldn't be wrong for saying, oh, we've come down, we've taken out the low, we got a fair value gap, I'm going to sell right there. You wouldn't have been wrong. But since you're in high resistant conditions and the higher time frame has not traded back into a premium, right? The higher time frame has not traded back into a premium. It has not gone back to an anticipatory reactionary point. So if this is where the algorithm wants to sell at, it has to prove it, right? Because when you look, this is when we dropped, right? Right? Yeah, that boy cooking today. That boy cooking today. This is when we dropped, right? When we dropped here, boom. The what's the name is created here. When that candle closed, it's created. Where are we in the sense of our bearish dealing range that we're trading in? Where are we?
In a discount.
We're in a discount, right? We're in a discount. Do we sell in discounts? No. If the algorithm is going to sell in this deep of a discount, it has to prove it to us, right? It needs to prove it to us. Give us something, create a balanced price range that you have sold off of, and then we're traded over here, right? So when we see this move back up there, now we're looking to see, okay, is this going to give us a continuation up here, right? That's what we're looking for. Now we drop down and we create another low here, right? And then we start to trade back up. And when we trade back up, where do we come to, right? Our old balanced price range that we pointed out, right? We pointed out this balanced price range on the live stream, right? On the live stream, we said that we had us a SIBI right here, right? Which was a balanced price range. And this balanced price range includes this high probability inversion fair value gap. So we just marked it out as a balanced price range instead of just marking this, or instead of just marking the SIBI, right? Just marked out the balanced price range. That's how I like to do it when I'm looking at right? Two PD arrays in confluence. I mean, two fair value gaps in confluence. I understand why I'm looking at this. I understand why I'm looking at that. Okay. So we said we're looking to see if this offers resistance to take us down, or if we come back above and create an inversion to take us back up. Why? Because this is the first imbalance that came down and took out that pre-market low, right? So if we get back above it, that's going to be a high probability inversion fair value gap to take us to the pre-market high, right? Now, when we trade back up here, boom, at this point here, when that candle right there trades into this balanced price range, now your structure time frame has traded into an anticipatory reactionary point, right? For this expansion leg here, right, we're back in the premium. And for our overall dealing range, right, once we come above there, now we're back in a premium, right? So if you're watching it based off the entire dealing range, which you should, because it's, you know, it is not that large of a range. This right here, the first one, how we had it set, that was just based off of the 930 open, right? Well, actually, that was a little bit before the 930 open, but it was just based off of what we was doing right around the 930 open, right? But looking at your dealing range there, right, on this candle right here, boom, you're in a premium, you're at an anticipatory reactionary point, right? That SIBI right there, right? That SIBI right there. And what did we say, right? What did we say about fair value gaps, right? What do we say about fair value gaps when they're resting around those quadrant levels, right? When you got a bearish or bullish fair value gap, right? You want the majority of the imbalance to be on the, if it's a bearish fair value gap, you want it to be on the premium side. If it's a bullish fair value gap, you want it to be on the discount side of that quadrant level. Meaning, if it's a bearish fair value gap, you want the majority of it to be above the line. If it's a bullish fair value gap, you want the majority of it to be below the line, right? And if we look at this SIBI right here, right, you see this is the line there, and a little more than half of the fair value gap is above that line, right? Because that's the equilibrium, that's the consequent encroachment of the SIBI, right? And this is that. So a little bit more than half of this SIBI is above that quadrant level, right? It's up in the premium. All right. That boy cooking tonight. Let him cook. Right. So when we trade back up on our 15-minute time frame, right, now we have come into an anticipatory reactionary point. At this moment here, right there, now it's okay to start looking for a reason to get short. If you're bearish, we're in a bearish dealing range. We come back to a premium, back at an anticipatory reactionary point, right? And we got all kind of different things we can look at, right? Now, let's go in and we're going to identify different levels that you can be watching based off of this example right here alone, right? Somebody give me some things that we can be watching based off this example alone once we trade up into this SIBI right here, right? We got the balanced price range. We already got that marked out. We got the balanced price range. What else can we be looking at?
Seeing if it respects the
I'm
consequent
just
encroachment
saying, give me PD, raise. Consequent encroachment of what?
of that SIBI, even though it's a balanced price range, it's allowed to go to the and trade to that consequent encroachment of that SIBI,
Okay.
and looking for
Consequent
it not to close above.
All right, consequent encroachment of the SIBI. What else with the SIBI that you want to pay attention to besides consequent encroachment?
Of the SIBI?
Yes.
Okay, consequent encroachment.
Look at your screen.
You got stuff over the screen.
I'm saying right
Oh,
here.
wait, I can't see the sun out. Hold on, let me see. I can't see. Oh, what does that say? Somebody help
Something
your
about
girl.
quads.
Thank you. Yep, we want to
Quads.
see 25,
The
50,
quadrants.
75.
There you go. You got the quadrants of the SIBI. All right. So we got the quadrants of the SIBI. What's this right here? Oh, that was the range we was looking at. That was our range. I don't need that. Let me see. Yeah, that was our range. I don't need that. All right. So we got the SIBI, the quads of the SIBI. What else we got?
We are the OB. We have an order block, change the state of delivery we watch, and we can put that in the cards too.
Up here?
Now the green candle, we close below it, change state of delivery. So doesn't that act as an order block?
Coming back up here?
No, the 930.
Oh, right
you
here?
talking about coming back up in there? Okay.
Yeah,
my
when I
bad.
said when we're coming up into the anticipatory react, the ARP, what are levels that you can use as confluence to help you with your trading decision? That's what we're looking at now. We got quads of the SIBI. What else we got?
That change in state of delivery order block doesn't count coming back up?
Talk about here?
Yeah. We close below it.
That's way down here though.
But the candle was so big, don't we want to see if that's respecting 50% of that or no?
Oh, yeah, you said change the state of delivery. I'm like, that's way down here. But okay, you saying mean threshold of the order block.
Yeah, I'm saying we had a change in state of delivery of that. So now we can use that order block.
All right, mean threshold of the order block. All right.
Right.
That's good. Mean threshold of the order block. That's a good one there. Okay. And like with this long wick, I like to use just the bodies. But if you like to include your wicks, right? There you go, right there. That's mean threshold using the wicks. But me, I like to use the bodies, right? So either way you do it, you're not wrong, right? But when it's a long, crazy wick like that, I like to use just the bodies. But mean threshold of the order block. All right, now we got one more.
More confluence is when it comes back down to retake that high probability.
We ain't talking about coming back down. We just talking about.
No, I'm talking about just right there. Oh, okay.
What's there? Not when it's moving. We looking at stuff that's already in price, right? We're coming up and we're looking at stuff that's already there. So if we're looking for stuff that's already there, we're looking to the left. You see what I'm saying? We're not talking about like let's see what happens when it get there. We're just looking to the left to see what's there, right? Because we want to see up, if it's this is here, right? This is here, right? It's one more thing there.
What we're looking for? Wick.
Which long
coming
wick?
Down? Let's see let's see.
What color?
It's red to the top. Yeah.
Yes, that's it there. You're looking at consequent encroachment of that wick right there.
Right? So even we still look at that, even though we have a real skinny candle in between that, we still use that bottom wick, right, as that previous candle.
Yes, you look at the wick that do the most damage. That's the wick that did the most damage right there. So you're not looking at that wick right there, right? This wick here is the one prior to this candle, but this is the wick that did the most damage. So that's the wick you're looking at, right? This is imbalance. We're looking at consequent encroachment of that wick. And everything that you look at, like halfway, mean threshold, consequent encroachment, all of that, you can also look at the quadrants, right? You're also looking at the quadrants on anything that you put a fib on, okay? So now, this is all your information that's, you look to the left, this is what already happened, right? So now, as prices trading up, right, And this is the candle right there that we traded when we first came into, when we said, right, this was our dealing range here, right? That's our dealing range there. So as price is coming back up into this SIBI, right? Once we cross into a premium, now we can drop to our lower time frame, because now we're in a anticipatory reactionary point where we want. Now we can start watching soon as it trade up here, but we're not going to start looking for reasons to sell until we get in a premium. All right, clear right now. So boom, I'm going to chop some of this stuff off so that when I go down, I ain't got the scroll so far. Right.
Hey, Tim, I have a question.
Okay.
Is it wrong for me to look at this? So I'm going to start with this green expansion candle here.
Here?
Yep. So
okay.
Price expanded. All right. We started coming back down. That third down candle.
Here?
Right there. Yes, sir. Did will we classify that as having broken structure? Because of that wick?
Yes.
Okay. And so then when price trades back up into that SIBI, is that not sufficient signal to say, okay, I'm going to short right here? Is
yes,
that
it is.
okay? Is that what we've been saying all along? I haven't been on, I'm not always on here, so some of the terminology escapes me, but is that what we've simply been saying all along? Because I know there's been some discussion of
if this 15-minute time frame is your structure and entry time frame, right? As soon as you trade, as soon as you come into here, you decide, do you trade at the low, consequent encroachment, or higher, right? You that's your decision how you enter on your fair value gaps, right? At the low of it or the high if it's bullish, right? But at the first touch, that's your guaranteed entry, right? Consequent encroachment, that's going to give you a better risk to reward, and or higher. But excuse me, the higher the time frame, the more your risk is going to have to be, right? So if you enter as soon as it touched there, there's nothing wrong with entering there, because that's where your stop is going to go, right? Your mandatory stop is here above the candle that formed it, and your safe stop is at the swing high of the price leg that the imbalance is in. So once you come up, get your break in market structure, and you come back and touch that, you can short, put your stop there, and that's it. And that's you ain't got to worry about nothing else. You ain't got to worry about going lower, looking at lower time frames or nothing. You're in the trade. You ain't worried about the drawdown, because your risk management allows you to put your stop there. And you ain't trying to do no you just got to sit through all of this, and then eventually get your payout if the risk to reward is worth it.
I got you. So one consideration along with what I just said would also be risk management, and whether I want to enter on a higher or lower time frame.
Yes, risk management is always the forefront of your mind, right? So there's nothing like, and I said this today, there's nothing wrong with once you trade back up there, ain't nothing wrong with just going short there. There's nothing wrong at all. But the way I trade is when it comes back to my anticipatory reactionary point, that's when I go to the entry time frame, right? Which is the 1 minute here, right? And now at this point right here, now that I'm on the 1 minute time frame, this is the point where I'm looking for a reason to sell. I'm looking for a reason to sell. And now, what am I looking for when I'm looking for a reason to sell? I'm looking for first time, right? At a algorithmic time, I want to see some type of manipulation, right? Followed by some type of displacement, right? I want to see manipulation followed by displacement. Okay. Now, looking at price here, once we come back, right? We come back up. We said once we trade into there, this is the time when we're looking now. So we see here, right? Price is going in here. We're chopping and slopping, right? We come up here, right? We trade up here to everything is very overlapping, even, right? We come up here, we still overlap, we drop down, right? We create a city there, right here on this 1028 candle there, right? And we're at the upper portion of our balanced price range, right? So we're up here, we're chopping and slopping, right? Creating relative equal lows here, right? So we come down here, right? Trade below that low, come back up, right? Completely overlap that, right? We drop down again, trade below that low there at 1037, rally back up here at 1047, taking out that high right there, right? And now, nope, wait a minute. That's when we go in right there. I thought this was I got too many lines. Let me get these lines out of here. I got too many lines in here. What is this right here? Don't need him. What's this line right here? Okay. There must have been some stuff I was drawing earlier today or something. All right, yeah, so that is it right there. So we come in here, we chopping and slopping, right? And then we get right over here.
Okay.
Say what? Okay. So now in here, we just chopping and slopping. When we come right here, right, we come into a macro window, right? We come into a macro window. Now, over here, we created a civvy right there, right? What time did we create? Now we went up, we traded up into some buy side, right? We hit. Oh, I know what that other stuff was. The other stuff was the stuff we was marking out to help us with our analysis. That's what that was. I just thought about that. Right. That's why you should always name stuff so you'll know what it is. That was since the I think this one lined up with something too, so we're not gonna put them all right. So that one right there is pretty close to that one. So we're just gonna put the one, right? The wick right there, and that they pretty much in the same spot. All right, so we're just gonna put the one. All right, so right right here, okay, we're just chopping and slopping. Okay, so when we come up here into wrong one, when we come up here into this buy side right there, then we drop down and create that civvy right there, right? What time is this right here? Move out the way, right? This is 1028, right? This is just no man's land. We're in the middle of the hour, right? We're consolidating and we're in the middle of the hour. We're in no man's land, right? So when we're chomping at the bit and we're anxious, any little imbalance we see, we say, "Oh, we fun to go." But we always got to remember time first. Time first, right? We're consolidating, right? We're in the middle of the hour, right? When we came here, all right. So during this macro window here, we dropped down, took out sell side, rallied back up, took out that buy side. Okay, retrace back down into the top half of the that inversion fair value gap we was watching, right? So this is 909. Let's see something here. 15-minute time frame. All right, not yet. All right. Not yet. So when that closed, that's when we created the reclaim. All right, back to the 1 minute. I was looking at when we create the reclaim fair value gap here, right? So we trade back down into that inversion fair value gap. It's not a reclaimed fair value gap yet. It becomes a reclaimed fair value gap when we close here because we've closed back above it, right? So we trade back down into the now on the lower time frame, it's being used as a reclaimed fair value gap because we're back above it. We came down, closed below it, got back above it. So on the lower time frame, it's being used as a reclaim, but it's not a reclaimed fair value gap yet because it's the 15-minute time frame and it hasn't been created yet, right? So when we leave out of this macro time, right, what did we did? We had a large move. Okay, now that we had that large move during the macro time, we start consolidating, right? So after the large move, we're consolidating now. So coming out of the macro time, we're consolidating, right? We're consolidating. Over here, when we made this civvy, it's still during consolidation. Okay, we take our buy side, come back down, take out a little short-term sell side, but we're still consolidating, right? Take out a little short-term sell side, come up and take out buy side, right? Now we're here at the upper quadrant of the civvy, right? We've come up here to consequent encroachment of the wick. We've come up to mean threshold of that large order block over there. That's what you remember all the lines was like here. It was like the order block was there, the what's name was there, and then the wick was there, right? And then once we make that high, right, we drop down coming into the macro time, right? Coming into the macro time, we drop down, right? We don't take out the low, right? We rally back up. We don't take out the high, right? Right? We drop down. We poke below that low, but we don't take out the lowest low, right? Still got relative equal lows. We rally back up. We don't take out the high, right? Same thing. We don't take out the high, right? During the macro time. So all we doing during the macro time is just chopping, right? We didn't take out the high. We didn't take out the low. As soon as we come out of the macro time, boom, we take off and take out the low right there, right? So now we've come up, got displacement, right? Going to the macro, don't get anything. Then as soon as the macro over, boom, we take off, right? When we take off right here, leave coming out of the macro time, the macro, we did not go higher, right? We refuse to go higher, okay? And when we come out of the macro, boom, we drop, right? Now, what is this right here? A balanced price range right there. You got a balanced price range. We just dropped out of there, right? We create an order block coming out of that balanced price range. If you trade order blocks, there's opportunity. Just as soon as we create that right there and we drop down below that opening price right there, right? Boom, right? Like remember I told you, change anytime you trade past a green candle, right? That's changing state delivery. But we drop down, shift the sentiment, going back the other direction, drop down again, order block, fair value gap, right? Drop down, right, to that previous high, trade back up into that imbalance right there. Right? Trade back up into that imbalance right there. Put some more meat on the bone. I should have did the whole day. There we go. Now, here we go here. Now we're getting into, right? We're going here into the London like close time, right? So at London close, when we come to London close, right? You got the fair value gap there, right? Now, this time here, if you're looking to short there, ain't nothing wrong with that. But guess what? You would have got bust in your head, right? Why is that? Because going into, right? Once we're going into that London close, getting into that 11 to 11:30 time frame, right? Anticipate some type of retracement, maybe, right? So when we come down here, right? That right there, you would have been bust in the head, right? Unless, right? Short in there, you using the safe stop, right? If you're using the mandatory stop, you would have been bust in the head, right? But if you're using the safe stop, like for me, that stop up there, that's way too far, right? For me to short off of from here, but that's your safe stop, right? If you use your safe stop, you're good. If you use this stop right here, you bust in the head, okay? So, take it with a grain of salt, right? Then 11:30, right? Going to lunch. Now we're in the lunchtime, right? The lunch trades back up. Price does the update. Michael got stuff about lunchtime macros and stuff like that, but I don't trade lunchtime. So here, using the safe stop, you'll be good. You're in the trade. Here, using the mandatory stop there, you're busting the head. Okay. If you don't trust that short right there, because it is in the discount right there, you can say, I want to trade off of something in the premium, right? If you're looking at that as a balanced price range and you don't anticipate it going back up there again, using that, if you use the safe stop, you're good. If you use the mandatory stop, you're busting the head, right? So it comes back up into a premium, back up here into this whole little balanced price range right there, right? All of that right there. We said we left that. That was a balanced price range. It trades back up into the balanced price range going into lunch, right? We come down, right? Have another structure break, right? Coming over here after going into the 1 o'clock during the macro time, during the 1 o'clock, trade back up into the balanced price range, back into the inversion fair value gap that we was watching from earlier that morning, right? And then after that, going into the before we go into the afternoon session, got heavy displacement down, right? Trading back down. Get out of here, right? Coming at 1 o'clock, getting ready to go into 1:30, heavy displacement down, and we drop back down another breaking market structure. Now coming into 1:30, the afternoon session, right? That's our lowest low from the afternoon, right? That's our highest high from the afternoon right there, right? That's our lowest low, highest high for the afternoon session. Going into the afternoon session, right? We said we just came down, had a breaking market structure, right? Coming out from lunch, from the lunchtime, right? We drop down, breaking market structure. The afternoon session, we come back up here, right? Into the bearish breaker inside this leg here, right? I got a lot going on this chart. I don't know if y'all can see it, but I can't see nothing. I can't see nothing. All right. I'll leave a new day opening gap there. That's a little bit better. Right. So, right. For the afternoon session, right? We trade back up. All right. Come back over here into the bearish breaker over here. Right. Trade back down, set a low, push back up, right? Poke above that high, right? They're just barely poking into a premium, right? Come back down, make that high there, going into the macro window, right? So going into the macro window for the afternoon session, right? We make that high right there on the 1050 candle, right? Our opening range ends there, right? So then once we make that high there, we drop down, taking out the sell side there. Got a SIBI right there. Okay. SIBI right
Tim,
there. Yes.
sorry, real quick. What's the opening range? Is it 130 to 2 or 1 to 130 for the afternoon?
130 to 2.
132. Okay, thanks.
Yeah. 132. So we displace down, right? Don't take out the low, right? Create a SIBI there, right? In a bearish dealing range. We've come back to a premium at a balanced price range, right? Displace down, SIBI right there, right? Trade back up into right here at 2 o'clock, right? Poke up into the SIBI, right? And then drop down again, create another SIBI, right? And notice where all this is happening right there at the prior morning's high and at the new day opening gap, right? Prior morning, regular session high. No, was that the regular session? Afternoon, right? So prior day, afternoon high, and the new day opening gap, right? All of this is transpiring right there, right? Trade back up into that SIBI there, right? Drop down, take out the opening range low, right? Rally back up one more time into that new day opening gap, into that high, into that SIBI, the same level, right? Displace down again, right? Once we come all the way down there, trade back up, back into that low, right? Drop back down again, right? And we're just continuing the same thing, right? Continue the same thing over and over, right? Trade, God dog it. Trade back up again, drop down, right? And then once we get long in the tooth, this right here was that afternoon low. The afternoon low that we was watching right there, right? Once we hit that, come down, get a bullish breaking market structure, trade back down into the first SIBI that went down there, right? Then we rally back up, come back up to the new day opening gap, right? But looking at price on your lower time frame, right? On the lower time frame, it requires you trading based off the narrative of the higher time frame to be able to trust your entries. Like I was saying before, over here, right? If you shorten off of this and you're using the mandatory stop, your safe stop, that's fine. But if you're using the stop there above the high, you would have been taken out and price still would have went in your direction. And if we cut this right here is 1129 is when it traded up in there. This is 1130, right? See how price looked at that point right there on the 15-minute time. Okay, so as we see here, right, on the 15-minute time frame, looking at the 15-minute at that time, right? This is the 1130 candle. So on the 15-minute at that time, right, we've dropped down here. Okay, but what have we done on this time frame? Nothing, right? We did nothing on this time frame. So shorten off of that right there based off the 15-minute time frame wouldn't make sense, right? Looking at, so if we got a, let's see here, so yeah, bear with me here. Trying to make it make sense to people, because I know when I be watching videos and people be like, oh, it wouldn't, if you take this trade, it wouldn't work out. But I always want to let you see that, does it make sense to take that trade there? Yes, this is the area right here. This area here. So let's talk 1130 candle. All right. Yeah, 1130 candle. Now, okay. So this is our 1-minute chart over here. This is our 15-minute chart over here. This now. So looking at our 15-minute time frame here, right? We traded up. Oh, we've been on here a long time. I was sitting up here looking like the Zoom getting thin, but we done been on here a long time. I'm sorry, y'all. We finna wrap this up. Been on here for over 2 hours. All right. So we was looking at this area here, saying if you took that short, if you put it there, you would have been safe. If you put it there, you would have been stopped out. Okay, based off of this move right here. Okay, now looking at the 15-minute time frame, right? This 1-minute SIBI, right, doesn't make sense to be shortened based off what the 15-minute is doing. Right. And why is that? Because based off of what the 15-minute is doing, right, when this candle closed, right, when this candle closed right here, right, that's the price we was at when that candle closed. So this candle closed on that candle right there, right? What did we just do? We just respected a reclaimed fair value gap, right? We closed below it, created an inversion. We closed above it, created a reclaim. We came down, wicked down, and then came up and closed above consequent encroachment, right? So since we just closed above consequent encroachment, we just respected a 15-minute bullish PD array. So trying to short off of that right there doesn't make sense. One, because we just respected a 15-minute bullish PD array. And two, we're in the discount of the move. Okay. Now, true, you could trust it because price is bearish. And if you use the safe stop, you would have been safe. But looking at what the higher time frame is doing, right, is that a realistic short right there? No, it's not. Right. Even if we traded into this and it dropped and didn't retrace back up there like that, it's still not a realistic short based off the higher time frame, right? It would have worked out, but based off what the 15-minute doing, not a realistic short, right? So based off what the 15-minute is doing, where is the realistic short, right? By combining your time frames. If we're combining our time frames, where is the realistic short, right? The realistic short would come in somewhere over here in this move up right here, right? Why is that? Because in the morning session here, the algorithm created an inversion fair value gap, right? Showing you that it wants to go lower, right? We traded back up into a balanced price range and a high probability inversion fair value gap, and it resisted price. Okay. We come back down here and extend the bearish dealing range, trade below that low right there. We've extended the bearish dealing range. Okay. This candle right here created the inversion fair value gap again, right? Remember the high probability inversion fair value gap. We retrace back into that high probability inversion fair value gap right there. So this is the move where realistic shorts should be looked for coming here. Why is that? Because the structure time frame is coming back to an anticipatory reactionary point, right? That's in the premium of the move, right? So based off the higher time frame, this is the area where the realistic shorts would be found, right? This short right here, even if it worked out, right, based off the 15-minute time frame, this ain't the spot to be shorting. Based off the 15-minute time frame, right, when we traded up here into the premium up there, when we said we reached up here, we came to a premium, it was like up here somewhere, right? This is the area up here you would have been looking for a reason to short, and that falls inside all of that chop right there, which was nothing realistic in my humble opinion. Okay, so do that make sense to everybody? Right? When you combine the time frames and looking for reasonable places to go long or go short on the lower time frame, right? It's far easier, right? What's going on, Pumpkin? Oh man, it's my time now. You had your time earlier today, baby. You could have called me at 1 o'clock, baby. You had your time earlier today. What's going on, sugar?
I'm just heading home. I came to Power State. I'm just not heading home. I usually call somebody when I'm going. I call that.
No, you can talk to me, baby. I'm fun to get off live, and I've been on here for 2 hours, man. I've been on here for a minute.
Well, you on overtime?
Yeah, I'm on overtime.
Why you giving all that extra time? Tell Live I say, hey, what's up?
Live, my mama said, hey. Hey, y'all. That's it. Hopefully this made sense, man. I know it was long. I know it was drawn out. We took a deep dive into a lot of stuff. Hopefully y'all got some gems out of it. I appreciate y'all. Until the next time I decide to get on Al Gore's internet and share my thoughts on this thing that we call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That's just big spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.